Welcome back to Income Trading 101. Today we are going to take a look at the Walt Disney Company. Everyone knows Disney. I was going to say everyone loves Disney. I know some of you out there would like to say you don't, but I'm sure at some point of your life, no matter where you are in the world, you probably was a fan of some of their cartoons, some of their movies. They do amazing things, and you may have even seen their shows on Broadway, all sorts of stuff, like Lion King, and I think they took. There are a couple other stories that have gone. Obviously, the Snow Whites and all of those. You've got Disney on Ice. It's just crazy, massive, and of course, you have the media company. And today, the Wall Street Journal. Today is February 11th, by the way, 2021. And the Wall Street Journal just they posted an article about Walt Disney adding 21 million subscribers to their Disney Plus. Why, you might ask? Because they are the proud owners of the Avengers series, and I happen to be a fan. So right now, WandaVision is just getting all sorts of press coverage, which is sort of a continuation of the story between the Scarlet Witch and Vision. But after the infamous Endgames Thanos snap. Those of you who watch Avengers will know what I'm talking about. They have another one coming out soon. During the Super Bowl this past weekend, they announced, or at least started to advertise, Falcon and Winter Soldier. And when I saw it, I got excited because I thought they were coming out with another movie. And it turns out that rather than release this as a movie, they're going to stream it as a series, as a short TV series, maybe a mini series. I don't know how long it will last, but during COVID, when people are not going to movie theaters, Disney has wisened up to simply streaming their content. So let's take a look at Disney today. I have the data pulled all the way out to mid 2010 just to give us a sense of where we've come from. And obviously, there have been some acquisitions during this time period. You can see a steady rise. Period was flat between essentially, I'm going to say 2000, mid 2015 and 2019. In 2019, we saw a rise. Of course, it took the pandemic hit in 2020, and it has come back with a vengeance. And the theme this week, it seems like, has been dividend stocks. So, although it would appear they suspended their dividend in 2020 because it's not showing up. I'd have to do some more research. Normally, TradingView is really good about adding that in. Look at that, though. They were giving an 88 cents, almost 90 cents a quarter. So that would be what? $3.52 they were paying a year on, $150. You could have picked the stock up at the low $100. At $100, man, it's a pretty nice percentage gain. So just in dividend fees, let alone the gain in the stock. We also, right off the bat, notice all of these gaps. And someone in my comments recently posted, that gap's got to be filled before that stock goes higher. And while that can sometimes be the case, there are no rules in this game. I look at gaps as an indication that there might be some open interest on the order book that might want to get filled if price starts to approach it. But there's nothing that says it has to happen that way. So that being said, let's take a look at Disney. Of course, we're going to get rid of the volume down here. I mean, this period in March of 2020 is the highest volume for most stocks because people were freaking out and there was heavy activity in the market, which is part of what just made it pull down and then bounce back up. But that being said, I don't use it in my trading analysis, but I do use, as you guys already know, moving averages. So let's go ahead and add a few of these moving averages to the chart, and we're going to tweak them because I want it to look the same as it's looked every day. There's a lot to be said for just consistency and being able to anticipate what a stock is doing simply because you've set things up in a consistent manner so that you can recognize them. So As usual, we're doing a 10-day, a 20-day, and a 60. The 60 being our longer term, like a 3-month period. There we go. So I'm also going to eliminate the 20, the March of 20. I will keep the up move from the low in April. So I don't know about you guys, but that looks like it's been pretty strong, a pretty strong up move. There have been a few points where the green arrow, the 10-day, has been lower than the red arrow, but by and large, this has been a green year. Yeah, just about a year of data. So, been very green, in fact. Let's take it to, when it looks so consistent, I like to take it to a smaller time frame just to get a closer look at the data, right? So we know that this stock will trade, thousands and thousands of shares per second. So we can take this down as low a time frame as we want. You really just want to make sure that you match the time frame that you intend to trade this. So if it's a long-term investment, you can look at monthly data. You can look at 3-month data. You can go as far out as you want because you don't intend to sell it. If you are day trading, you probably want to, your maximum time period should be a 1 hour. You probably are closer to looking at like a 15 or a 5-minute or something like that. So with the 1 hour chart, you can see there was a period beginning of 21 that the stock had a downward trend. All three lines, the 60-day, the 20, and the 10, were in line below one another, and this stock made lower lows and lower highs. And then in late January, it just started to pop. And look at this. We've got gap, 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 gap. That's pretty significant. To just start gapping higher like that is quite powerful. Let's see something. See if I can. Nope, wouldn't let me do it. Anyways, we'll keep on going. So, yeah, let's take it down one step lower, just to get a sense of where we are right now. So far this looks bullish. I haven't seen any data to say otherwise. I opened up talking about some fundamental stuff as well with the company, but just looking at the chart, still looks bullish. We've got this back on February the 4th. We've got all three moving averages in line, even at the 15-minute level. Higher, it did come off here at 8:30 on February 9th, and it's sort of been chopped since. It's sort of sideways right now for the past few days. It's kind of interesting, right? When you start to look at it from that aspect. And when I'll draw a trend just so you see what I mean when I say sideways. Look at this. These highs are very similar. So that's kind of flat for the last few days, but of course on the longer term chart, this still, let me get rid of that. On the longer term chart, meaning the 1 day, this still looked very much bullish. So let's go ahead and go back out. We'll head back out to the 1 day. We're going to get rid of the moving averages. This time I want to use my next favorite, I shouldn't say favorite, but one of my next in line strategies or indicators I look at. It's just the moving average convergence divergence. And this makes the attempt to it adds some additional color, if you will, to these moving averages. You've got moving averages. We get a cross under below the 0 line back in November of 2020. So that would be a strong indication to go ahead and buy. We also had a sell above the 0 line. So that means we're in oversold territory or overbought territory, and you would be looking to sell here. And, this is a significantly lagging indicator. So take a look at this. Like here, this is where where this moving average conversion is really crossed over, and you already were 5 days, 5 or 6 days into this upward movement right here. So this, I like to use it to see where momentum is, but you do need to know how it reacts for the individual stock you're looking at and whether or not you can trust the signals perfectly or not. And you also can tweak the settings down here. I'm not going to. I just stick with the standard ones, but you can tighten it up or loosen it up a little bit, just depending on how you want to view the data. So I'd say right now this is still going higher. It's above the zero line, which means that this is not really a clear buy signal. A clear buy signal would be a cross below the zero line. So right now we're just sort of, this is what happens when you're in an upward trend. You don't get many crosses below the zero line. So you just end up having sort of oscillations. You have waves, but all above the zero line, which makes it a little difficult to know when to actually short the stock. So, or sell sell your longs. So that's it for the MACD. Let's go ahead. Well, it's hard to look at a Fibonacci analysis when we are so one-sided. We're in one direction. But I do want to go ahead. I love looking at trends and just seeing, like, finding channels, seeing if there's anything of value to looking at the data this way. Certainly, you have to be aware, always be aware of the flaws of your thinking, the flaws of your system, because let's undo that. Because you can end up, I'm having challenges tonight. You can end up really sort of overfitting or overanalyzing a chart, and that's actually pretty bad too. So let's see if I can raise that, and ideally, there you go. I don't know why it wouldn't let me a minute ago. We're going to adjust these here. Just so you can see how they, so we literally, as of late October of 2020, had a change in the slope of the upward trend. It had been pretty slow and steady, and then it really started to crank up its volume in October. And part of that could be because of this gap that was caused by stronger earnings. You can tell their earnings estimate was 72%. It was expected to be, looks like it was expected, I'm sorry. I see what happened. They were expected to lose 72 cents. They only reported a loss of 39 cents per share. Because it was better than expected, even though it was still negative, the stock gapped higher. So I know that makes sense to some of you, and to the rest of you, that's going to be like, wait, what? They still lost money. Why didn't the stock go down? But it's all about this expectation. And I think even what they're doing, a little bit they're doing with streaming media right now, adding shows rather than putting the money into movies and big blockbusters. And getting, subscriptions are long-term money. You know why? I'm sure many of you listening to this have a subscription to something, and they charge you every month, and you keep forgetting to turn it off. It could be something like, a phone that you're not using anymore. It could be something like a gym membership. It could be a book club. It could be any number of things that continue to charge you, but they know that if the subscription price is low enough, you're probably not going to think about it, and you'll forget to cancel it. So adding subscribers is like adding long-term money. That subscription base is very valuable to the company. So anyway, again, this is not a fundamental show. This is about technical analysis. And so I really just, even though I use more than just these three indicators, these three actually were the basis of my very first trading system. And I think they can be used very effectively in most markets. So, series of moving averages, Fibonacci retracement, and the MACD. So that's it. Thank you guys so much for watching again. I mean, if I had to give a summary, I do think this stock is going higher. Everything seems to point to that. So it's just a matter of seeing how you intend to take advantage or how you intend to trade that market. I am an option trader. I have an option trading podcast every week. I'll be doing episode, I think, 152 this week, 152 or 153. So I've been at it for a long time. And on that show, you get to hear how I would attack this. Maybe I'll do a Disney trade this week. We'll see. Let's see how I would approach Disney stock or Disney options as a trade. And I like doing that because when you have a stock that's trading for almost $200 a share, one lot, 100 shares is going to cost me, 19 grand. And so I might want to do things. I might want to use options or some other structure to be able to still benefit on short-term directions in the market, but yet not consume so much cash flow and have so much cash flow at risk. So that's it. I can ramble. Thank you guys so much for listening. And hey, happy trading. Take care.